Hi folks, welcome to Money Ed Financial Academy. I'm your instructor, Jerry Penner. If you already know what a financial statement is and how to create one, you're halfway to a budget. If not, please review my video on creating a financial statement. A budget groups the expenses in a financial statement and applies percentages to those groups to indicate if you are over or under budget on each group. Here are the percentages suggested by Gail Vaz Oxlade, star of the TV show Till Debt Do Us Part, which aired from 2005 until 2014. Housing expenses are a maximum of 35% of net income and includes all of these things: mortgage, electricity, gas, water, sewer, maintenance, taxes, and insurance. If each one is not a line item in your budget, it should be. Transportation, 15%. If you own or lease your car or cars, you need to include repairs. If you use anything other than 2 feet and a heartbeat to get you from point A to point B, it counts as transportation. Life. This is where things can get out of control if we aren't watching. Lifestyle creep is a big issue here because it happens silently. Debt repayment. If you have any type of debt, debt repayment is over and above the minimums. If you can't pay more than the minimum amounts on your debt, you need to find ways to make that happen. If your budget is so tight that you can't afford to save, you need to increase your income or decrease your spending. Gail Vaz Oxlade recommends a 10% savings rate. Mr. Money Mustache went more extreme. He recognized that when he left university with a fresh computer engineering degree in hand, that he was going to make terrific money. His classmates got great jobs and started lifestyle creep. Better cars, better apartments, better significant others, more lavish nights out, more expensive vacations. He recognized that he could still live the life of a college student while making computer programmer money and stashing away the difference. He was able to save 75% of his net income. He retired 9 years out of university. Now, you might not be able to do the extreme savings of Mr. Money Mustache, but the more money you can save, the faster you can retire. We're dealing with a lot of line items here. Each is a moving part in a much larger machine. How do we keep track of that? With another spreadsheet, of course. Here's mine. If you're a pencil and paper person, you can calculate and recalculate as you make changes. If you're good with spreadsheets, you can use what you see here as a template to create your own budget calculator. If you have no desire to create your own budget calculator, please see my Etsy shop and pick up a copy there. Once you have a budget that works for you, you can start living on cash. Gail Vaz Oxlade was a big supporter of cash jars. She broke down the monthly budget into weekly increments. At the beginning of each week, you put the amount of money specified in each jar or envelope for each major group in the budget for that week. When you spend the money from a jar, you replace it with a receipt for the amount spent. The receipts and remaining cash should always add up to the amount put in the jar at the beginning of the week. At the end of the week, take the receipts from the jars or envelopes and sort them into file folders for each major group for the year, keeping these for tax time. Any extra cash gets added to debt repayment. Reload and repeat. Doing it with debit and credit cards is a little tougher. You can still use the envelope system, but now you need to put the money you spent from each envelope into 2 different envelopes marked debit card and credit card. Make your own receipt if you don't get one from the retailer and put it in the appropriate envelope. At the end of each week, the amounts you've spent on debit and credit get deposited to the bank in your bank account. Pay the credit card amount immediately. Don't wait for the statement. So what do you do with all of those receipts each week? Well, you can create a running balance. Some folks will balance their checkbook against the bank statement at the end of the month. I take it one step further. Since I now know what my monthly income and expenses are, and what my quarterly and annual expenses are, I can build out another spreadsheet that takes all that data and projects it forward. By projecting my income and expenses forward, I can see exactly when I'm going to pay off all of my debts. I can include large purchases, like a new car, in the forecast, so I can see how it will affect my future. And it looks like this. In the first three columns, we have the year, month, and date. The next three are for the bank account. Money put in, taken out, balance. The balance column takes values from the in and out columns and adds or subtracts them automatically for an accurate balance. The next three are for credit card, balance, charges, and payments. Any line in the description column that contains CCPMT automatically takes the amount specified in column F and copies it to the CCPMT column. The CC balance column is modified by adding the value in the CC charges column and subtracting the CC PMT column. If you're good with spreadsheets, you can build this out yourself. If you'd rather not, check out the template I have in my Etsy shop and I'll get you started. So, you've got some homework. Fill in the super secret budget calculator and adjust your budget until it balances. The next step is to build out your running bank balance sheet so you can see how your efforts are going to progress. You can use this to predict when you will have your credit cards and other debts paid off.